Good day, everyone. Today we will be looking at analysis of the Nigerian tax bill. Let us meet your facilitator, Olatunji Abdulrazak, founder of TaxMobile.online and managing partner CEO of AOA Professional Services. Brings over 20 years of experience in tax advisory, regulatory services, and transfer pricing. He has held senior roles in various organizations, including Director of Tax and Regulatory Services at Norlands Nigeria Professional Services, Senior Manager Tax Regulatory and Advisory Services at Saffron Professional Services, Tax and Fiscal Reporting Accountant at Schlumberger Nigeria Limited, Audit Trainee at Ernst & Young. His expertise spans internal audit and control, transfer pricing, arbitration, tax advisory, audit support, forensic investigation, and due diligence. Olatunji holds a BSc in accounting from the University of Ado-Ekiti, now Ekiti State University, Ado-Ekiti, an advanced diploma in transfer pricing from Thomas Jefferson School of Law, and a certificate in international financial reporting, ACCA. Olatunji is affiliated with several professional organizations, including Association of National Accountants of Nigeria, ANAN, Chartered Institute of Taxation of Nigeria, Chartered Institute of Public Finance and Accountancy UK, Chartered Institute of Arbitrators UK, Certified Fraud Examiners, Australian Tax Institute, and International Fiscal Association. Olatunji has authored several influential publications on VAT and transfer pricing, which include VAT in the oil and gas sector in Nigeria, International VAT Monitor. This is published by International Bureau for Fiscal Documentation, IBFD. New transfer pricing regulations, prospects and challenges, published in International Transfer Pricing Journal, also published by IBFD. VAT and the financial service sector in Nigeria, published in International VAT Monitor. Transfer pricing regulations and audit in Nigeria, published online by Transfer Pricing Inside Africa. This article also featured at the Transfer Pricing Minds Africa Conference in Cape Town in November 2015. Effect of the OECD BEPS initiative on Nigerian transfer pricing regulations, published in International Transfer Pricing Journal. This is also published by IBFD. Transfer Pricing Regulations 2018 and Guidelines for Country-by-Country Reporting in Nigeria. This is also published in International Transfer Pricing Journal. And lastly, Transfer Pricing, Recent Developments and Overview of Digital Taxation in Africa, published in International Transfer Pricing Journal in June 2022, published by International Bureau for Fiscal Documentation, IBFD. So we will be looking at Module 1, Introduction to the Nigerian Tax Bill. Now, the Nigerian Tax Bill 2024 represents an ambitious effort to consolidate, simplify, and modernize Nigerian tax framework, addressing gaps in previous laws and introducing innovative measures to enhance compliance and economic growth. The bill unifies a range of tax regulations into a single coherent Nigerian Tax Act, which covers corporate and individual tax obligations, sector-specific incentive, international tax rules, and new compliance mechanisms. Spanning multiple chapters and schedules, the bill's provisions are designed to standardize tax treatments across income types, transactions, and economic sectors while adapting to the evolving digital and international economy. So we will be looking at the key provisions and structure of the Nigerian Tax Bill 2024. The bill is organized into 9 comprehensive chapters, each addressing major areas of Nigerian tax landscape, from income taxation and petroleum sector taxes to relief from double taxation and stamp duties. Additionally, 13 schedules provide detailed guidelines on capital allowances, tax exemptions, incentives for export zones, and residency determination for tax purposes, among other topics. So let us look at the chapter highlights. Chapter 1, for example, defines the bill objectives, outlining its scopes and nationwide applicability, unifying tax laws under one act to streamline compliance and standardize tax treatment for individuals, businesses, and non-resident entities. Chapter 2 focuses on income taxation, including corporate tax rates, allowable and non-allowable deductions, taxation on gains, and special provisions for non-resident and corporate dividends. Chapter 3 addresses petroleum operations, setting specific tax rates, deductions, and terms under the hydrocarbon tax and petroleum profit tax, as well as tailored rules for production sharing contracts in deep offshore regions. Chapter 4, it outlines relief measures to prevent double taxation, offering unilateral relief for non-treaty jurisdictions and benefits under double taxation agreements. Chapter 5 covers stamp duties, defining chargeable instruments, duty rates, and payment compliance, including provisions for property transfers, company share capital, and lease agreements. Chapter 6 details the VAT structure, defining taxable supplies, VAT rates, non-resident supplier obligations, and remittance processes with a stage rate increase to 15% by 2030. Chapter 7 introduces excise duties on certain high consumption services such as telecommunications and gaming, ensuring duty on transactions benefiting Nigerian residents. Chapter 8 focuses on tax incentives and exemptions, including income tax exemptions, certain entities, development tax credit for priority sectors, and specific VAT and stamp duty exemptions for essential goods and services. Chapter 9 contains general provisions addressing business restructuring, related party transactions, anti-avoidance measures, authority for regulations, and interpretation of key tax-related terms. Now, over to the schedules. The 13 schedules had granularity to the bill, providing specific guidelines on topics such as capital allowances for companies, which are, outline eligible expenditure for tax relief, export processing and free trade zones, detailing tax relief for export-oriented entities, individual income tax rate, progressive tax rate for individual income, production and mineral royalties, defining royalty obligation for oil, gas, and mineral extraction, and residency determination for tax purposes too. The schedules also, clarify residency rule for individuals, corporation, and trusts. So, in conclusion, the Nigerian Tax Bill 2024 introduces a forward-looking tax framework aimed at transparency, compliance, and adaptability. It encourages economic growth through structured incentives while targeting tax compliance through enhanced monitoring and administrative provisions. Now, through its comprehensive structure, the bill aims to create a fair, balanced, and modern tax environment poised to support Nigeria's economic transformation and align with international tax standard. Thank you for listening. and hope to see you at the next module. Thank you.